Welcome back, everyone, to week 51. Now, I think the place that we need to start looking at what happened this week is with the US dollar, because since not QE4 started, the dollar has actually moved lower. Well, kind of as expected, but given the previous events or non-events that the dollar seemed to not care about, this is really interesting. Now, depending on what timeline you're using, or if you look at charts or not, the dollar may have even broken its uptrend. In the short term, it looks like it has. In the longer term, depends on when you look back to. Uh, it definitely took a noticeable leg to the downside. Now, has there been confirmation yet? Has there been a failed rally? Not really. So we'll have to keep watching that. Was part of it on some new Brexit optimism with you know, uh, a deal Brexit, so everything's not imploding in Europe. Euro makes up a big part of the US dollar index. Maybe. Maybe trade, or maybe the move down was due to not QE4. Whatever, whatever it is that's going on, this is definitely the thing that requires attention, I think, uh, last week, this week, next week. Um, and I also find it interesting that as of this morning, you look at the odds for a rate cut that is what is supposedly priced into the market, and it's at 88%. So the dollar's weakening, even though we're basically expecting a rate cut. It's interesting. So some of you may recall the big deal that was made by everyone, and I spoke about it here, um, when the repo rates blew out in the middle of September, I think it was. So back then, they said the next period of high stress was supposed to be at the end, towards the end of October, I believe. Now, that's either next week or, well, this upcoming week or the week after, depending on the exact end of October. Now, it seemed to be unsure, questionable, I would say, whether the 75 billion overnight repo facility would be enough if that much pressure arose again in the repo system. But since then, the whole not QE4 has started, and we'll have to see if that balance sheet increase and that um, not policy shift, if you follow what they're saying, has alleviated enough pressure. But it is definitely another thing to watch heading into the end of October. Given the number of factors going on, I mean, I guess they're always present within gold. Gold still being basically at 1500 at the end of the week has to be a pretty dang near a meme at this point. Whenever I talk about it, it's around 1500. Moves in the week, but then there's all sorts of chaos that just happens. There's been a bunch of bearish technical patterns, and one would have expected gold to be weaker on those. And I'll call it unbullish trade momentum, in that things seem to be not getting worse. So that one would think gold could move off on that. But it's at the end of each week seems to just be not going anywhere, even though I'm sure many of you, all of you, will see that it does seem to be moving rather a lot during the week. But then we get back to the US dollar. And the US dollar has moved down significantly over the past week. I mean, significantly for something like the dollar. And yet, gold has moved up in the past week, but if you look longer term, the longer term, I'm talking a month, month and a half, the correlation between gold and the dollar doesn't seem to be as strong, either positive or negative correlation, as some might think. I mean, at least when I'm looking at it, I don't see, doesn't look obvious. On uranium front, the working group decision was due last week, so obviously they delayed it. Now, in the meantime, the past few weeks, it's been pretty positive news flow for future demand. Now, in terms of construction starts and how long it takes future demand to become solid future demand to become demand, well, that's still up in the air. But there has been a number of reactor builds or commitment to eventually build reactors that have been reaffirmed recently. So that's positive. We'd like to see more reactors start building, but that'll come when it comes, or not. Okay, so on base metals, there hasn't been like they haven't been rocketing higher, and it hasn't been like economy booming or anything like that. But I feel like a crazy person when I'm looking at them, looking at the pricing, looking at the inventories, for example, and thinking these things just want to go higher. And I mean, obviously they don't want to because they don't want anything. But is anyone else seeing this? Just particularly looking at copper and zinc. I mean, I know a number of people have been bullish for a while, but I'm talking about in the past, I don't know, 2 weeks, 3 weeks, maybe. It seems, I can't say what, but it seems like something has maybe shifted. Again, I don't have confirmation. I don't have strong conviction in this yet, but just something, even in the face of what supposedly economic weakness, they seem significantly less sure about that. And I say that because a while ago, maybe a month, maybe 2 months, I had pointed at, on a tweet, I'd pointed at $1 zinc and I said, wow, that seems to be pretty sure that the economy is not doing too well. And now, while the equities haven't really moved, the price of the commodities has moved up a little, and I say they seem to be less sure than they were back then. So I wanted to touch on oil, because there was a big build last week and the prices didn't seem to care. And so I'm wondering if we're approaching a point where we may be at the bottom. Now, the reason I haven't been buying or haven't started buying is because while the price of oil seems to be potentially bottoming, the equities don't. Now, they could be, and it could be just the ones I'm watching, but they don't seem to be uh, thinking that the price is going to stop going down soon. And that's okay. I'm just kind of thinking that probably with something like oil, we'll probably see a more rounded bottom in the equities. I will probably miss the bottom, but I think there could be some more prolonged uh, low prices. And so that's why I'm less willing to be super early. That being said, there is, um, I'm less willing to be early because there are some, let's say, political risks around. One of which is actually happening the 21st, so Monday, is there's an election in Canada. Now, uh, quite a number of the names that I've been watching closely, the most closely, I would say, are in the Canadian uh, oil patch. So, or have exposure or are Canadian names. So there's some risk there. We'll have to see which way the election goes. But if it goes the way I'm kind of thinking it might, there could be some pricing in to do. And when we're looking at the US, if there's prolonged periods of question and periods of break-even oil prices, let's call it, there's also some U.S. political questions that are coming next year. So we'll have to see how all the politics goes for oil. The world will still need its oil, and it will definitely still need its oil for a while. But just because the prices are cheap, and the equities are really, really interesting, uh, I don't know if now is the perfect time to buy. The equities are really cheap, but could stay that way for a while. Could not. They could triple tomorrow. I don't know. But for the time being, I'm watching closely and not in. Okay, so I will address shipping, even though not much happened this week. The rates, I mean, across the board, it's been a stabilizing week of catch up, catch down, depending on how you want to look at it. We're still a few months away from heading into IMO 2020. We should see the rates, if they're going to be impacted. We should start seeing that soon. Interestingly, while the fourth quarter is seasonally strong for different types of crude and clean crude, finished products, I should say, the fourth quarter is strong, but October historically wasn't the best of the fourth quarter. Now, this year there was a huge move up in price. I wouldn't say it would be fair to extrapolate that forward, but if it does, well, then the shipping stocks could do well. But in the meantime, at these prices, at these rates, at these fixtures, they are profitable, quite profitable. So we'll have to see how that advances. Now for the second to last week of picks. The uranium pick for the week is going to be next gen. It really, at this point, with the exposure that's in the portfolio, if the new uranium ETF were available again, that would probably be the pick, and just have our particular exposure just generally still very bullish. So that's one. Second pick, Altius Minerals. Now, this has been on the top of my watch list for a while. It's not crazy cheap. It's not, well, I don't think it's likely to get crazy cheap, but I think it could move lower. And that's why I have it on my watch list. I figured I'd put it here because really it was taking me forever to pick something and just put it in. But it's a well-run company. I was thinking about making a video about it, but I really like it. I think it could get cheaper, but it's kind of dangling on some support now. Could easily go up. The company, it's an investment, not a speculation. I would be comfortable holding this for the long run. And then pick three, Lucara. Now, if the economy, the global economy does strengthen, then diamonds generally will do well. If not, not. But either way, if Clara works, they're ridiculously cheap. If not, then they're probably just quite cheap, depending on if the underground diamond mine works. Again, there are a number of questions here, but realistically, I think they're still immensely profitable. It's possible they may have to, I mean, if things get really bad, they may have to trim their dividend, but really, I think long term from here should have been buying more. So yeah, so that's all for this week. I know I covered a lot of topics and rambled on a few, but I hope there was something in here for you. And until next time, have a great day. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses losses incurred from investment decisions made as a result of information obtained on this channel. Good luck with your investments. I'll catch you next time.